Hello and welcome to India Business Hour on the eve of Christmas. I'm Ashmit Kumar and here are the headlines. All our viewers a very happy Christmas. Here are the headlines that we're tracking this evening. Weaken against the US dollar, hitting another record low. Stock markets end with marginal losses after failing to hold early gains. Prime Minister Modi meets over a dozen economists ahead of the union budget. Officials were also present for the closed-door meeting, which took place after GDP growth in Q2 slowed to a 21-month low. Tata's financial services arm, Tata Capital, ropes in advisors ahead of the potential IPO in 2025. The decision for listing is in line with RBI's mandatory requirement for upper-layer NBFCs to list within 3 years of being notified. Sources say that the IPO size is likely to be around 15,000 crore rupees. That's a money control exclusive. Stimulus in order to soften the blow of an expected increase in tariffs once Trump takes charge. Reuters reports that Chinese policymakers plan to issue special treasury bonds worth a record $411 billion next year. India's telecom regulator promises guidelines against pesky calls in a month. Says telecom service providers have been asked to provide at least one tariff plan without data and only for calls and text messages, specifically designed for feature phones. Dabur moves Delhi High Court against Patanjali, alleges that an advertisement featuring Baba Ramdev claims that only Patanjali's Chyawanprash is the original one and that other companies lack the expertise. Dabur claims that the advertisement is disparaging and damaging to other companies. High Court agrees to hear the matter but refuses to restrain Patanjali from airing the ad. The Election Commission of India counters allegations by the Congress party over Maharashtra elections, says that the increase in voter turnout between 5 p.m. and 11:45 p.m. is normal. Also adds that a case has been registered over allegations of voter list manipulation. Mercury dips across North India as the Met Department warns of a severe cold wave. A fresh wave of snowfall hits Manali yesterday, leaving around 1,000 vehicles stranded between Solang and the Atal Tunnel. Kashmir's Sonmarg too witnessed heavy snowfall. Veteran filmmaker Shyam Benegal, one of the trailblazers of the new wave cinema in India, dies at the age of 90. He was suffering from a chronic kidney ailment. Leading film personalities attend his cremation at Mumbai's Shivaji Park. A NASA spacecraft is attempting to make history with the closest ever approach to the sun. The Parker solar probe has been out of communication for several days as it endures brutal temperatures and extreme radiation. Well, let's go straight to the action from the money markets. The Indian rupee hit yet another record low today. The rupee ended 8 paise weaker but stood firmly above the $85 mark amidst dollar buying by oil importers. Month-end US dollar demand is expected to put further pressure on the Indian currency. Bond prices remain largely steady. And while there wasn't much cheer on the Lal Street either, it was a flat close to what was a range-bound session of trading. The benchmark indices ended with marginal losses, with the Nifty falling below the 23,800 mark. Infosys and HDFC Bank were the top drags. Metal stocks took a breather today after yesterday's rally. All sectoral indices, meanwhile, barring FMCG and auto, ended in the red. Well, time now for some market commentary coming in from Sameer Arora of Helios Capital. He believes that the current bull run in the market is more measured than previous rallies. In a conversation with CNBC TV 18, Arora said that he was upbeat about financials and IT stocks in 2025.
I have seen widely out of line markets. For example, in 2004, 5, 6, and 7 calendar years, the market was up 40% per annum. If you look at the 500 index, it was up some 39 point some percent per annum. We have seen periods like 1999, when the market went up some 85% and the NAV of my fund, Alliance Equity Fund, now called Birla Sun Life Equity Fund, in that one calendar year was up 280%. Those are wild bull runs. This is a measured bull run according to me. So our logic is that you will have 2 or 3 main chunks which mostly the market has converged to financial sector, financial services, private sector banks, and some form of IT, which for 2 years we were bearish up to June of 24, and now we think IT is a good sector. We will not buy the EMS companies because our logic is that we have a benchmark, and those benchmarks of EMS companies trade at 8 multiple and 10 multiple, and in India you can make it 20 because everything is double, but you don't make it 150 multiple.
Well, in some international news, China's policymakers plan to sell $411 billion worth of special treasury bonds in 2025. According to a Reuters report, this would be the highest bond issuance on record. The move is in sync with Beijing ramping up fiscal stimulus to boost the slowing economy. The funds raised will be used to support consumption subsidies, business equipment upgrades, as well as investments in key technologies and advanced manufacturing sectors. Well, back home, Prime Minister Narendra Modi held consultations with leading economists and other stakeholders ahead of the budget 2025. Finance Minister Nirmala Sitharaman and top officials of the Niti Aayog were present at the meeting. Parikshit Luthra joins us now with more. Parikshit, tell us what were the key focus areas for the Prime Minister, for the North Bloc, for the Niti Aayog ahead of the budget?
Well, the clear focus in this meeting was the 2047 roadmap. Ever since the Prime Minister took over for his third term, the entire government machinery has been chalking out a 2047 roadmap. And sources tell us that even the Prime Minister and his team was more concerned about a long-term higher growth trajectory than the immediate budget exercise. Though there were consultations about the budget and what measures can be taken to spur growth across sectors, the larger focus was how can we have a larger vision for 2047. So this included a blueprint for the agriculture sector, the MSME sector, manufacturing. There was also a discussion on how India can leverage the current geopolitical landscape and have a bigger play in global value chains and be a bigger exporter to the world as well. Job creation was a big focus area in the budget in July. We had seen an internship scheme, a skilling scheme, and an employment scheme being announced, and clearly there could be further job employment push areas in the budget as well. But here the focus was on how to have sustained job creation across sectors, have more skilled jobs till 2047 as well. So you had the likes of former Executive Director of IMF, Surjit Bhalla, Ritam Desai of Morgan Stanley, D.K. Joshi of CRISIL, Ashok Gulati, and agricultural economists, BVR Subramaniam, the CEO of Niti Aayog, Suman Berry, the Vice Chairman of Niti Aayog, the Principal Secretary to the Prime Minister, Nirmala Sitharaman, all top leaders and officials from the government were present in that meeting, which was focused beyond the immediate budget exercise. But at the same time, there are concerns about a growth slowdown, especially in the September quarter, and whether we can come back to a high growth trajectory fast enough. So there were some discussions on that, but the broad discussions on the 2047 Viksit Bharat blueprint.
Right, Parikshit, thanks so much for that. Now, small businesses in India created 11 million jobs in FY24. That's according to an annual survey of unincorporated enterprises released by the Ministry of Statistics and Planning. Now, the survey comprised of small businesses across manufacturing, trade and services. According to this survey, number of jobs increased from just over 109 million in FY23 to more than 120 million in FY24. The estimated number of small businesses across sectors increased from over 65 million to more than 73 million, according to the survey. Well, more national news. The government is mulling whether items distributed for free under the public distribution system should be included in the new consumer price index basket. It has floated a discussion paper inviting stakeholders' comments till the 15th of January. Sapna Das joining us now with more details. Sapna.
Well, this is a discussion paper that has been doing the rounds for quite some time, and now that it's public, it has a lot of importance for the way probably inflation will be calculated in the times to come. Though, of course, this is only going to be applicable for the new CPI series, which is only going to roll out in the last quarter of FY26. So that's a caveat that we need to keep in mind. But nevertheless, some interesting propositions have been made, and this is a discussion paper by Mosby, which basically says that since the new CPI series are likely likely to come out, or rather work is on the new CPI series, and 2024 is going to be the new base year, is what the discussion paper says very clearly. It questions the fact whether the PDS items, or rather free food grains particularly, should they be included in the CPI basket or not? That's the question that is being raised, and comments have been invited here till 15th of Jan. Very quickly, what are the options that the government is talking about? Number one, of course, is the inclusion of PDS items into the CPI basket, on a zero price, wherein the weights can be adjusted with a later update. That's one. The other two options that it talks about, of course, these first with the current series, which is basically you do not have the PDS items which are covered, because once they became free as per the international definitions, once it's free, it doesn't have an impact on inflation. There's nothing that the consumer is paying, and hence it's not part of the inflation index, is what the international definition says, and that's what the government followed over here, and hence it's not part of the CPI basket. But what happened was that those weights were redistributed, in the same class and section of, say, example, cereals and other important products. So what happened was that there was a temporary spike in inflation. The third option that we're talking about is, again, not including the PDS items. However, again, the weights being redistributed among all the items in the CPI basket. So I think it's the first one that we're talking about here. That's where the government is keen, because they think that will really help to bring the headline inflation number down. CA has been talking about it since quite some time, that the PDS market is pretty large, and the way the free food grain distribution has happened, it is not reflected enough in bringing inflation numbers down. So probably this is something that they'll have to keep in mind. Of course, we have to watch out what those comments are going to be by 15 Jan. And of course, this rolls out only sometime in the last quarter of FY26.
Right, Sapna, thanks so much for that. Now, moving ahead, in a bid to expand its footprint across North America, OYO has completed the acquisition of US-based G6 Hospitality for $525 million. The company operates around 1,500 hotels under brands like Motel 6 and Studio 6 in the US and Canada. OYO expects this deal to generate a gross booking value of $1.7 billion and pump up its EBITDA to 2,000 crore rupees in FY26. And Greaves Electric Mobility, the electric vehicle division of Greaves Cotton, plans to go public. The company has filed for a 1,000 crore rupee IPO with SEBI. The IPO will be a combination of a fresh issue of shares and an offer for sale. The proceeds will be used for product research, building battery assembly capabilities, and boosting manufacturing capacity. Meanwhile, shares of Amber Enterprises surged over 5% in today's trade. This after CNBC TV18 reported that the company is looking to demerge its electronics division. According to sources, the company might also float an IPO for its electronics segment, for which bankers have already been appointed. The electronics division comprised of 20% of Amber Enterprises' total revenue in FY24. In a statement, Amber Enterprises said that it evaluates various strategic opportunities from time to time for their growth. Now, the aviation regulator, DGCA, has slapped a fine of 10 lakh rupees on Akasa Air for denying boarding to 7 passengers on September 6th. The Akasa flight was grounded due to damage and was replaced with a flight that had 9 non-operational seats. As per the DGCA order, the airline arranged for an alternate flight with Indigo, but did not provide compensation to the passengers. This was considered to be a violation under the civil aviation requirements. Now, over a year after Tata Tech's successful IPO, another Tata Group company is eyeing its D Street debut. Sources tell Money Control that Tata Capital, the group's financial services arm, has initiated work for its IPO and could raise 15,000 crore rupees. Ashwin Mohan joins us now with more details. Ashwin, tell us, what does the roadmap look like for this Tata Group company?
What we are given to understand from our sources is that Tata Capital, the financial services flagship of the Tata Group and the subsidiary of holding company Tata Sons, has in fact initiated work and the process for a big bang mega initial public offer or IPO in 2025. Sources are telling us that this issue could be anywhere in the region of 15,000 crore plus rupees, and these sources are also telling us that it could likely be a combination of both a primary issue of shares and a secondary component. Now, Kotak Mahindra Capital, the investment bank, and law firm Cyril Amarchand Mangaldas, these are the two advisors that our sources are telling us have been roped in as of now. Other bankers and law firms may also be taken on board at a later stage. Now, if you look at Tata Capital, it had assets under management of around 1,58,000 crores as of March this year, and Tata Sons holds around 92 odd percent in Tata Capital. The remaining stake is held by a few other Tata Group companies and also the trust. Now, the reason why the Tatas are going in for this IPO is because under RBI norms, all NBFCs that are classified in the list of upper layer NBFCs, they have to mandatorily list by September 2025. So that is the regulatory compliance, and hence this process has begun. We are yet to hear from Tata Sons and Tata Capital. Let's keep a watch out for this big deal in the new calendar year.
Right, Ashwin, thanks so much for that. Now, shares of Whirlpool and PG Electroplast climbed following the announcement of an expanded partnership. The two inked a deal for contract manufacturing of select models of Whirlpool washing machines at its Roorkee facility. This gives a boost to PGL's Make in India commitment and also offers cost benefits to Whirlpool. PGL is already an existing supplier of Whirlpool branded air conditioners in India. Well, from the electronics to the telecom space, India's telecom regulator has promised new guidelines against pesky calls and has assured that they will be released within a month. Speaking to Abhimanyu Sharma, TRAI chairperson Anil Kumar Lahoti also defended the move to ask telecom service providers to offer a tariff plan without data and only for calls and text messages specifically designed for feature phones. Take a look.
In respect of the unsolicited commercial communications, again, we have completed the process of consultation, that is the comments, counter comments and the open house discussion. And after this, again, we have received a large number of comments because of the importance of the subject which are under examination, and we should be able to come out with the amended regulation within a month's time.
Well, Swiggy has signed an MOU with the National Stock Exchange to roll out a financial literacy program for Swiggy's delivery partners. Swiggy has also set a target to have 1 lakh women delivery partners by 2030. The company's food delivery business head Rohit Kapoor spoke to CNBC TV 18's Rachna Dhanrajani about the new initiative and the company's 10-minute food delivery platform, Bolt.
If you're ordering aloo tikki burger on McDonald's, it's the same aloo tikki burger which you used to get in 30-40 minutes earlier. You're getting in 10 minutes. It's because I think we have densified store locations, etc., and we are delivering to a shorter radius. Very exciting. I think we are seeing very good trends on Bolt. Already touching 7.5%, 8% of it crossed 5%. I think now it's touching about 7% of platform orders. But more interestingly, I think we were the pioneers in quick commerce. I think we are definitely the pioneers in quick food delivery, and we'll be doing more and more. So watch out for this space.
Well, Dabur has moved the Delhi High Court against Patanjali. The company has alleged that an advertisement featuring Ramadev claims that only Patanjali's Chyawanprash is original and that other companies lack the expertise. Now, all of this boils down to an advertisement authorized by Patanjali that was broadcast on various broadcast networks as well as leading dailies. And in that advertisement, Baba Ramdev is believed to have been said that this Chyawanprash, the Patanjali Chyawanprash, is the original one, and companies making other Chyawanprash do not have the expertise and are only making ordinary Chyawanprash. Now, it is to combat this that Dabur has moved the Delhi High Court. They've made the allegation that this is a disparaging ad, this is a damaging ad. It hurts the competition, it hurts players, especially players like Dabur who've been invested in this space from the very beginning. They command a lion's share, 60% of the market share. Also going on to say that the suspicion that this Patanjali ad is seeking to raise and is seeking to suggest is that there is a public health scare with respect to consumption of Chyawanprash of other brands. Now, the immediate relief, the interim relief that Dabur had been seeking was to have a High Court stay on these Patanjali advertisements going forward. However, the High Court, while on one hand has agreed to hear the Dabur application, on the other has not granted any interim relief to Dabur, has not stayed the playing out of Patanjali ads. Instead, has said that it will take up this case for further hearing in the month of January of 2025. But that's not all. Coming up on India Business Hour, 2024 was a year heightened regulatory scrutiny for India's financial sector. Was the RBI crackdown overly punitive or just a proportionate response? A special report coming up. And you can also catch all CNBC TV 18's news and updates on Facebook, X, Threads, Instagram, and Geo Cinema. Well, you are watching India Business Hour. A cold wave has gripped several parts of North India, including Himachal Pradesh, Jammu and Kashmir, and Uttarakhand. A fresh wave of snowfall hit Manali yesterday, leaving around 1,000 vehicles stranded between Solang and the Atal Tunnel. Kashmir's Sonmarg too witnessed heavy snowfall. India's External Affairs Minister S. Jaishankar is set to embark on a 6-day visit to America days ahead of the Trump inauguration. This will be the first high-level visit from India to the US since Trump's victory in the presidential elections. Telugu actor Allu Arjun appeared before the Hyderabad police for questioning in connection with the stampede during the screening of Pushpa 2. The police had registered a case against him after a woman was killed and her son was critically injured in the stampede. Allu Arjun was arrested on December 13th and later granted bail for 4 weeks within 5 hours. Now, the Election Commission of India has countered allegations by the Congress party over Maharashtra elections. In a 66-page response to the charges, the poll body said that the increase in voter turnout between 5 p.m. and 11:45 p.m. is normal. Santya Gora is joining us now with more details. Santya, take us through some of the allegations, questions raised by the Congress party and how the Election Commission has chosen to respond.
So the Election Commission of India has responded to the allegations made by the Congress, citing electoral discrepancies during the Maharashtra elections. The ECI has dismissed all these allegations. Here are some of the key allegations and the ECI's responses to them. The most significant allegation raised by the Congress was the inexplicable increase in the voting percentage from 5 p.m. to 11 p.m. on polling day. The ECI has clarified that there is no discrepancy whatsoever in the voter turnout rate data. It explained that there is a difference between how the voter turnout rate is recorded in Form 17C and the trend uploaded on the voter turnout rate, that is VTR app. According to the ECI, Form 17C is filled at every polling station by the presiding officer and co-signed by the agents of candidates, and this particular form has the exact VTR. In contrast, the VTR app trend is collected by the sector magistrates through various methods, including physical visits to polling stations, phone calls, and messages. The ECI stated that data on the VTR app might suffer from errors in data collection. Additionally, it noted that the 5 p.m. data on the VTR app is interim, as voting can continue past 5 p.m. or even 6 p.m. The ECI has also uploaded a detailed note on its website explaining the voter turnout process to educate citizens. Another key allegation made by the Congress was the addition of voters. The Congress claimed that over 50,000 voters were added across 50 assembly constituencies. The ECI has called this allegation misleading and factually incorrect, stating that over 50,000 voters were added in only 6 assembly constituencies. The increase in the overall number of voters was attributed to the registration of individuals who turned 18 after the Lok Sabha elections, measures taken by the election authorities to maximize voter registration, and increased voter enthusiasm to get themselves enrolled. The Congress also alleged arbitrary deletions from the voter list. In response, the ECI stated that over 8 lakh deletions were made, all following proper verification processes. Regarding the allegation of voter list manipulation using fake Aadhaar cards in Tuljapur, the ECI has said that an FIR has been filed and the matter is under investigation.
Right, Santya, thanks so much for that. Now, 2024 has been a year of heightened regulatory scrutiny for India's financial sector. From fintech heavyweights to traditional banks and microfinance institutions, the Reserve Bank of India took action against a series of lenders and financial entities, signaling a firm stance on regulatory compliance. CNBC TV 18's Ritu Singh has the highlights of what has been the year of the big regulatory crackdown.
2024 was a year of reckoning for the financial sector. The Reserve Bank of India took unprecedented action against various financial entities, signaling a shift towards stricter compliance and consumer safety, and driving home the message that abiding with regulations is non-negotiable. The ball was set rolling early in the year with action against Paytm Payments Bank. The RBI barred the bank from onboarding new customers or accepting any deposits, effectively shutting down the payment bank's business. It based this action on repeated non-compliance by the bank with KYC norms and governance deficiencies. But it wasn't Paytm Payment Bank's first brush with the RBI. However, this time, the central bank had run out of patience.
Such restrictions which we impose are always proportionate to the gravity of the situation.
In March, two firms, IIFL Finance and JM Financial, faced business restrictions. IIFL, a key player in gold loans, was restricted from issuing new loans because of violations in gold valuation and loan-to-value ratios. For JM Financial, the offence was governance lapses in financing IPOs and bond subscriptions. In April, Kotak Mahindra Bank was ordered to halt onboarding new customers through its online channels and suspend new credit card issuance because of weak IT systems. And the crackdown extended to microfinance as well as new age lenders. In October, RBI barred 4 non-banks, DMI Finance, Ashirvad Microfinance, Navi Finserv and Arohan Financial Services from sanctioning and dispersing new loans, citing excessive pricing practices and non-compliance with regulatory guidelines.
We found a number of NBFCs charging exorbitant interest rates.
Right.
Interest rates going up to 40%, going up to 45%. Now, and who is the borrower? The borrower is he is a man of small means.
Right.
And these are not well-off sections of society.
Restrictions on one of the NBFCs, Navi Finserv, were lifted in a little over a month, on IIFL Finance in 6 months, while those on JM Financial products were in place for 7 months. The others, however, are yet to free themselves of regulatory embargoes. So why this sweeping regulatory action?
The Reserve Bank has taken up this as one of its focus areas to create awareness as well as to ensure adherence to good corporate governance practices.
The RBI's tough stance has been met with praise and criticism. Some quarters allege it is being overly punitive, especially towards fintechs. For instance, soon after the action against Paytm Payment Bank, a dozen startups penned a letter to the government arguing that such measures could stifle innovation and hurt the broader fintech ecosystem. RBI says the numbers don't support this argument.
Out of over 150 banks, over 9,000 non-banking financial companies, about 1,500 UCBs, and various other entities that we supervise, stringent actions have been taken only in a handful of cases.
RBI believes these actions will serve a dual purpose. One, it's a signal that the cost of non-compliance will be too high to ignore. And two, it promises consumers greater transparency and protection. For financial entities, this is a wake-up call they cannot afford to ignore.
What is becoming increasingly evident is that this is a new, stricter, no-nonsense RBI that expects and demands compliance with its rules and regulations. And while it is willing to give financial entities time to get their house in order, its patience is not endless. In Bengaluru, Ritu Singh.
Well, before we wrap the show, here's wishing our viewers Merry Christmas and season's greetings. We leave you with visuals of Christmas Eve from across the world.